This is the Growth and Value Podcast, empowering and inspiring stock investors, helping you take control and make a difference with your investment dollars. Looking for quality stock tips? Well, we may or may not be talking about Apple. We may or may not be talking about Google. We may or may not be talking about Disney. However, since we use our proprietary algorithms to screen, analyze, and rank over 6,000 stocks every week, we will be talking about timely investment opportunities. So you may often hear the name of a company you haven't heard of before, and you know what? That is often the best kind of opportunity, an opportunity to get in early before the investing masses. The Growth and Value Podcast is made possible by Connor Management Group, a registered investment advisor firm. Hi everyone, it's Matt Connor with Connor Management Group, and this week we're going to look at the best small cap stock to buy. Today is Tuesday, December 2nd, 2014. And here in the opening slide, we see that this company is in the industrial equipment and components industry, and we see this company's 6-month upside potential at 38.1%. On to the second slide. We see that the name of this company is called General Cable Corporation. That's General Cable Corporation. Their ticker symbol is BGC. The industry they operate within is industrial equipment and components. And once again, we see the company's 6-month upside potential at 38.1%. On to the quick facts slide. General Cable Corporation designs, develops, manufactures, markets, and distributes copper, aluminum, and fiber optic wire and cable products for the energy, industrial, construction, specialty, and communications markets worldwide. The company offers electric utility products such as low and medium voltage distribution cables, high and extra high voltage power transmission cable products, bare overhead conductors, and submarine transmission and distribution cables, as well as provides design, integration, and installation services for products such as high and extra high voltage terrestrial and submarine systems. So basically, this is a wire cable company. On the surface, admittedly, it sounds pretty low tech. Additionally, it sounds a bit like even a commodity business. But in the end, this is a small cap company, and we think it's undervalued, and we do think it has an upside potential of 38.1%. And the website is www.generalcable.com, just like it sounds, GENERALCABLE.com. That's generalcable.com. The company is headquartered in Highland Heights, Kentucky. They were founded in 1992. They have 15,000 employees. Once again, the ticker symbol is BGC. They operate in the industrial goods sector, and they operate in the industrial equipment and components industry. The annual revenue for General Cable the last 12 months was $6.1 billion. The net income was negative $451 million, and their cash from operations was negative $17 million. The market cap of the company was $648 million. So that may have raised an eyebrow already. Here I am recommending a company that lost a bunch of money last year and its cash from operations was negative. Well, we're pretty confident, and the market and analysts seem to think that this company is turning around after a very strong stock pullback. And on to the products and services slide, we have the General Cable logo, and we have excerpts from a recent investor presentation, and it shows a picture of some of the different cables that they manufacture and design, and they have pretty complex geometries. But additionally, here we have some excerpts from some of the slides from the investor presentation. So on one of these excerpts, we have a table titled Core Strategic Assets, so where most of the operations are. And 43% of their assets are in North America, 20%, or I should say 19%, are in Latin America, and 22% are in Europe. So that's basically, they have operations in U.S., Canada, Brazil and Chile, Colombia, Costa Rica, Mexico, France, Germany, Portugal, and Spain. And their revenue mix in North America, the largest segment, 30% of their revenues is from the electric utility industry, 37% from the electrical infrastructure industry, and 12% is from the construction industry. You can imagine a lot of these wires are used in the construction of bridges as well. We also have, as an excerpt here, a summary from management on what their plan is going forward. So here are some of the bullets that they prepared as far as a summary of their outlook. The strategic plan is to simplify their portfolio, reduce organizational complexity by exiting their Africa and Asia Pacific markets. They say higher value-added products will continue to be sold globally from the company's ongoing core strategic businesses. They have focused on delivering increased returns from our core strategic assets in North America, Latin America, and Europe. The leadership transition plan is in place. The board of directors is to be expanded. There's significant progress on their restructuring plan. They're going to build, position, and turnkey projects, communications, transportation, industrial, and specialty cables. And they say they are well positioned to benefit from future energy, infrastructure, and construction investment. The capacity is in place. So that's what we have for their products and services slide. On to the metrics slide. Once again, the annual revenue of the last 12 months was $6.1 billion for General Cable. The net income was negative $451 million, and the cash from operations was negative $17 million. The operating margins for 2014 are tracking to be 5%, and the operating margins for 2015 are expected to be about 6%. So that's essentially flat as far as we're concerned. On to the valuation metrics. The trailing PE ratio is at 15.0, and the forward PE ratio is at 7.3. So analysts believe that earnings are going to increase quite a bit. So, a ratio from 15 to 7, that's a pretty large percentage change. The PEG ratio is at 2.0, not too high. But the price to sales ratio, this is the lowest one I've ever seen, at 0.1. That's low by any metrics that I've seen, that's for sure. And the price to book is at 0.9. It's not too often you see upside opportunities with a price to book less than 1, that's for sure. And the enterprise value to EBITDA ratio is at 6.4. The recent closing price for General Cable was $13.53. The 52-week low for the stock was $12.47, and the 52-week high for the stock was $31.50. So that's right. The 52-week high was $31.50, and the recent closing price was $13.53. So this stock has pulled back a lot over the past year. As we'll see on the next slide, it's pulled back over 50%. So the 20-day moving average for the stock is $18.09. The 50-day moving average is $18.47, and the 200-day moving average is $20.35. The average daily trading volume for General Cable stands at 1.1 million shares per day, so it has a decent trading volume. The beta for the stocks is 1.5, so it typically moves more than the market. When the market goes up, it goes up more, and when the market goes down, it tends to go down more. So the beta is at 1.5. And the other interesting thing about General Cable is that they pay very high dividends, and this is not something you don't see this too often on a small cap stock. The dividend yield is at 5.2%. That's substantially above the average dividend yield of 2%. And also the average dividend payout ratio is at 29.7%. On to the next slide. We're looking at the price chart for General Cable. And basically, as I mentioned, this stock price has declined over the past 2 months by 52.8%. So, as I mentioned, people often will raise an eyebrow when you buy a company that's pulled back a lot, but its story is solid, and its earnings are expected to grow by 58% over the next year. And similarly, even its cash flow is expected to grow by 24%. So cash flow is expected to increase substantially, as well as earnings is expected to increase substantially. That with changes in management, they're becoming more lean and efficient. We think this is an opportunity worth considering. So I'm not going to bother to go through the different points of decline. Overall, it looks like a somewhat steady decline over the past year. General Cable is primarily an infrastructure company, so they've been sensitive to economic cycles, and the winds just have not been in their favor over the past year. And on to the summary slide. The financial statement quality, the General Cable, we consider to be good. They do have debt. The debt they have due over the next 5 years stands at $773 million, and the profits that they're making each year is somewhere around $70 million on average. Now, while that debt is stated at $773 million, which sounds a lot in comparison to its profit every year, quite a bit of that debt is actually convertible into equity. And it's expected that's what's going to happen over time. Additionally, the operating margin, as we noted, it's increased from 5% to 6%, and we consider that to be flat. The price pattern trend has been declining, and also our overall market outlook is pretty neutral. We don't see the market barreling in one direction or the other, and we don't expect there to be any headwinds or support for General Cable. So the recent closing price for General Cable, again, was $13.53, and our 6-month price target for the company is $18.69, and that is what drives our 6-month upside potential for General Cable of 38.1%. So this company is a little different from what we've looked at in the past. This is a company where it's had some recent negative net income, some negative cash flow, but things seem to be turning around for the company. They have a good story going forward. Most of the analysts seem to buy into the story, and this is how you make money on opportunities. You look for good value plays, and you take positions that aren't necessarily very popular. But it's for all these reasons that we believe that General Cable Corporation is the best small cap stock to buy right now. We hope you've enjoyed this presentation, and we'll talk to you soon. Take care. Bye. Hi, this is Matthew Connor from Connor Management Group, and I just wanted to take a few more minutes to give you some background about myself and Connor Management Group. First of all, if you enjoyed this podcast, and I hope you did, and you have been over the past few months or so, please write us a review on iTunes and Stitcher. We really would appreciate it, and it would help us get more subscribers. So that's something we'd appreciate. So for the podcasters out there, please go to Stitcher or iTunes, and for you guys on YouTube, I'd appreciate thumbs up and like, as well as just becoming a subscriber to the CMG Stock Picks channel. All right, well, that's what I wanted to say with regard to the podcast and YouTubers. Hey, try to be efficient. But I wanted to share a little bit about myself. Basically, I've been told from some friends and listeners that know me that I could enlighten my audience with a little bit more about myself. So I'm not all that comfortable with telling about myself. I really kind of want you to enjoy the content. But for those of you that have an interest, this is why this stuff is all the way at the end. So, okay. My name is George Mathis Connor. My background is that, I have a bachelor's in mechanical engineering from a place called Rensselaer Polytechnic Institute, engineering school in upstate New York. A master's in engineering from Cornell University, also in mechanical engineering, and I have an MBA in finance from the University of Chicago. So, hey, that takes care of my educational background. Basically, bottom line is to see, yeah, I did a lot of schooling. What my career experience has been to date, I started out my career as an engineer, did a few years of that. Worked on a lot of cool landmark renovation buildings in New York City for a few years. One of the most high-profile ones was my company, or I should say the company I worked for, was part of the renovation team of Grand Central Terminal. So for those of you that passed through there, I've spent a number of years in and out of every cranny of that building and facility. I also worked as a banker in New York after I got my MBA, and basically I worked on financing a lot of large-scale infrastructure projects, mostly power plants, but I worked on some basketball arenas as well, and some chemical plants, and even some coal mines. I've been deep down on the ground a number of times in my career. Additionally, let's see, after that, started working on the investment side of developing power plants, and particularly I spent most of my career with a company called Enron and another company called GDF Suez, where I worked on the development of power projects where where I acted as a equity investor for whether we were going to build them or buy them or sell them. And after GDF Suez, I am now an investment manager, and basically, I've been studying deals over the years, learning to build complex financial statements, always evaluating them, the cash flows, and making sure that these things will be profitable. And investing in the stock market was always a hobby of mine that I took more and more serious over the years. So after a bunch of time, I just, I'm really going to go after this. And so I spent maybe about, say, 3 years actually working on the development of some proprietary algorithms. I was just convinced that with my mathematics and computer background, coupled with all these financing deals, of which I became very good in with accounting and finance, I thought that I could at least find one way of consistently finding stock opportunities. So it was the development of these proprietary algorithms and me having some success with them that led me to the development of Connor Management Group and the development of all these videos and podcasts you've been seeing and hearing. And I am pretty happy with these algorithms. Basically, they review, analyze, and rank over 6,000 stocks every week. They're pretty comprehensive and pretty thorough. The algorithms use fundamental technical analysis and also consider some macro level measures. And another thing that's pretty unique is that these algorithms estimate future stock prices with specific time horizons. I haven't seen too many people on the web that will give you a potential stock price, say consistently say this is what we expect the price to be in 6 months, or this is the price that we expect there to be in 12 months. And I think for most of the videos and podcasts that I produce, you've always heard me give a potential stock price going 12 months out. The premium subscribers actually give them a stock price for the top stock prices for 6 months out. So that's about what I have to say about the algorithms. Additionally, about Connor Management Group, our primary offering of CMG LLC is that we are a managed account service. And basically, a managed account, for those of you who don't know, is basically a more hands-on, customized way of investing for the long term. It's basically a complement or a supplement to 401k or IRA with, and it has more benefits. And basically, you probably haven't heard of these as much or over the years because they've just become a lot more available to middle-class investors. And that's primarily because of advances in software for being able to handle many clients and move them in and out of custom portfolios and options. So if you want to know more about our managed account business, please go to ConnorMG.com. That's www.connormg.com, or you could go to our website and you can see a presentation that compares kind of management groups side by side with other managed account providers. E-Trade provides managed account service, Fidelity does, a lot of other mainstream firms. And like we said, basically now that technology is advanced with software, it's a lot easier to manage. So basically, as with E-Trades, the minimum size of account we open, say $25,000. And while as I'd say 10 years ago or more, minimum account size is probably $500,000. So there are a lot of changes, and you'll be hearing more and more about this account service, as time goes by. Additionally, let's see. Additionally, you can get to know us through our social media footprint. Basically, we have a presence on all the major websites for your convenience, and there you can get a lot more articles and hear about different points of view on things going on in the market. So we have a presence on Twitter, Google Plus, and Facebook, as well as LinkedIn also. So you can be kept abreast of our thinking on stock investing, as well as things we share by others who we consider thought leaders. And finally, CMG offers 2 newsletters, both weekly, 2 weekly newsletters. One is to keep investors up to date about relevant news and provide in-depth analyses on a quality investment opportunity. And those opportunities are consistent with the free weekly podcasts and videos. And the other newsletter we provide is our premium newsletter, and that one provides the latest top picks from our proprietary algorithms that we run every week. So, feel free to go to CMG stockpicks.com, and you can go there to subscribe to the newsletters. And if you go to the website, you can also view this deck and or any of the decks going forward, and there'll be a link there to everything I've just talked about. Basically, everything from the podcast to the newsletter to the presentations about our managed account service. So, hope this was helpful. Nice overview. Hope it didn't bore you. You can listen to this a couple times. That's why I put this at the end of the stock presentation. And I'll talk to you soon. Take care. Bye.